Well, hello everyone. Yes, this is the final episode in the series, How to Pay Off Your Loans. Now, this episode is going to be talking about credit, right? Because this would not be possible without having some knowledge of how credit works, what these credit bureaus are looking for, how you can get better credit. We're going to be talking about that today, right? So, of course, this series would not be complete without talking about credit and how you got to keep it, right? And utilize it and grow it. So let's go ahead and dig in, all right? What do I have behind here? Oh, look at that. We have a chart on the percentages that the credit bureaus are going to place upon you to see, hey, are you lining up with what we want you to in order for your report to be good, right? Payment history is 35% of the report, folks. It's 35%. It's a huge amount, okay? So, and so is credit utilization. Did you see that? So let's see here. Since credit utilization and payment history are the biggest ones, okay, on this scale, payment history takes up 35%, credit utilization takes up 30%. Where should I place my focus? We're paying on time, right? And your credit utilization. Isn't that beautiful? You know what else is beautiful? Is that when the credit bureaus and when the lenders see that, you know what, this guy, this gal, they're utilizing the velocity banking method and they are paying us tremendously. They're paying on time. What we want to do is we want to help them out on the credit utilization side. All right? We're going to give them a line of credit increase, and you become a victim of a line of credit increase. That's right. When you're utilizing this velocity banking the way that we have showed you. All right? So what you want to do with credit utilization, you want to make sure that you're below the 30% mark. And what that means is that just make sure that when you are making those payments to those amortized loans, that you're doing your best to get below the 30%. Now, if you have a vision, right, to go ahead and pay that loan off faster, then guess what? Remember what I said. I always live by this. The credit scores go up and they go down, and they go up and they go down, right? Absolutely. So don't be afraid of a 6 to 10 point ding simply because your credit utilization has gone a little higher than you needed to. Remember, you know what to do. You know to stay below the 30%. You know when your grace periods are because you read the terms and conditions, don't you? Absolutely. So keep that in mind. All right. What's next? Well, we got the length of credit history. That's for 15%. So how long have you had that credit? Okay. That's what it's looking for. Your credit mix. Okay. Do you have installment loans? Do you have those credit cards? Do you have a good healthy mix with your bank, with your lending institution? If not, it's time to get on the bandwagon, right? It's time to build that trust, to build that relationship. That's what the money is all about. When you're paying that monthly, don't think of that as a bill or something that is coming out of your pocket. Think of it as something that's building your credit. It's something that when you do pay on time, it's actually going to decrease the amount you have to pay in the future by lower interest rates. It's actually going to put more money in your pocket by those credit limit increase on unsecured credit cards and unsecured lines of credit. Money that they just put in your pocket because you've been so consistent in your payments. Folks, there's a lot of things that I want to share with you. And we should have gotten taught this earlier. But now is the time to learn as much as we can about credit. And not to throw away our credit cards, but to learn how to use them. Don't throw away the rocket ships simply because they protrude fire. Learn how to use them to go to space. Learn how to use fire for productive means. Learn how to use these credit cards. Learn how to use velocity banking method. Simply because one person is irresponsible with it does not mean that you are irresponsible with it. We want you to look at this chart and realize that you can do it. You know, up there it says 10% new credit. 10% new credit. I had somebody ask me the other day, hey, should I close this account? And I said, whoa. We don't want to close that account. Why? Because when you close that account, that line of credit goes down, doesn't it? And what happens to your credit utilization? Oops, right? So we don't want to do that because we want to build our credit history, don't we? We want to build our length of credit history. And we want to make sure that when we implement the velocity banking method, we are staying within the boundaries that have been set so that we can utilize this method to pay off those loans that before time we were afraid of, but not anymore. Folks, if you got any questions, don't hesitate. Email me, creditwiz@investorpro.org. Like this video, share this video infinity times, give me some feedback, comment, and we will talk to you soon. All right? God bless and have a great night.